Ladies and gentlemen, Joshua Salvetti, welcome to the High Performance Trader, right? And today I want to spend a little bit of time and show you guys, right, how I run through on Sunday and get an overall temperature of the market, right? You guys always hear me talking about identifying market conditions, right? You always hear me talking about adapting, right, to the market, understanding who's in control, is it buyers or is it sellers, right? And a big thing that you must learn to do is set your chart up, right, with specific areas of value, right? And obviously you can't identify every area, right, because that's going to cloud your judgment, right? So the purpose of this video is to really spend some time, break down who's in control of the market, what sort of conditions are we in? Is it bullish? Is it bearish? Are we trading sideways? Are we in a range? Right? And really spend some time, right, showing you guys what it is I do constantly, right? Especially on the weekend and especially on days the market's not open, right? To kind of generate a relationship with the market and understand, right? If this critical level gets broke, I want to trade this way. If this critical level, if sellers break through this level, I want to go short, right? So it's really important to set yourself up for success, right? And understand, hey, these are the levels on my chart. If these get broken or if these be respected, I want to trade this way, right? So it's really important to learn to do it. So we're going to jump right into it. So first thing you want to do, right, after a week of trading, you're going to have a bunch of areas on your chart from previous trades, right? And I'm not saying get rid of them, right? But one thing that you want to do is jump to the daily time frame, right? Actually, might as well make it the weekly. So each candlestick is 1 week, right? And then I just want you guys to start identifying areas of value, right? So we're going to start on the S&P 500, and the first area I'm going to hit, right? Add drawing. I go to my rectangle, and I pull it out, and now this is a demand zone, right? So this is an area, right? If we ever come back to, I'll be looking for buyers, right? Now, why is that? It's because every time price came into this area, buyers showed up. It's literally that easy, ladies and gentlemen. That is it. So let me just get rid of this end of day. Now let's really break down some supply zones. So obviously we got a large supply zone up here. So we're going to right click, add drawing, right? We're going to change the color of it to red. I like to go with darker colors, right? Darker, super light colors. It's just too bright. Obviously, you could do whatever you'd like. So now that I got my large demand zone, my large supply zone, right, I'm going to right click, duplicate this drawing, right, and bring it down because that's another supply zone we got. And now I identified an upward trend here, right? So I'm going to put a little trend line going up. Okay, so now we got another supply zone right here, but the way I want to do this one, right, is add drawing. We're going to make it a price level because this is a target, right? And it's really important that you put your targets on. Well, what works for me is not using red rectangles for my targets because that kind of makes me biased and makes me think, hey, sellers are going to show up there. And the last thing you want to do is assume sellers are going to show up anywhere, right? You just want key levels of interest, right? Where if price enters this, I'm going to react this way. And that's what's so important, right? And I think a lot of traders get that confused. And I want to touch on that real quick, is that just because you're entering a supply or demand zone, that doesn't mean buyers or sellers are going to defend it, right? What's really important and to get in the habit of doing is understanding what sort of candlesticks you want to see in these supply or demand zones. And if you see those, what's that telling you, right? So your purpose as a trader is to trade with large money, right? We cannot move the market, right? Large money needs to move the market for us, and then we trade with them. So the way we do that is identifying their moves in these areas of value, right? So it's really important to get in the habit of waiting patiently, right, for price to enter these areas of value and then identifying what the market's telling you through candlesticks, right? We break this down in one of my online courses, but the candlesticks are nothing but market language, right? This is how the market speaks to us and tells us, hey, we're at VWAP and we just got a reversal candlestick, right? And that probably means sellers or buyers. Someone's defending it, right? So you must use these candles to tell you the direction. Now, obviously, in a nutshell, sometimes we get faked out, But our job as traders is to make the most probable trades, right? With the highest probability, right? This is going to guarantee us long-term longevity in the market if and when we trade them properly and prevent ourselves from becoming vulnerable and not using stops and stuff like that, right? So our goal is to trade the most probable trades, right? And the way I do that, right, is to not be biased, right? Obviously, if we're entering a supply zone and I'm long, I can't just assume sellers are going to show up, because if sellers don't show up, I'm going to leave massive money on the table. And on the flip side of that coin, I can't just assume buyers are going to bully through it. I must learn to adapt to current market conditions. And the way we do that, or I do that, is through candlestick analysis, right? So get very good at understanding those candlesticks. We're going to break some down in this lesson. All right, so we got our target here. I like with targets, I like to go with a neutral color. I use purple a lot. I use blue a lot. For this specific lesson, I'm just going to go with pink. No, there's no specific reason. Okay, so what I'm going to put here, right, is a super bullish target. So in the event buyers are in control, I'm going to put bullish target at this 43183 level. And then I'm just going to hit OK. So now we have our bullish target. So now it's really important to identify key areas that you have defended previously, right? So now I'll kind of go, now I'll break into the daily time frame and look at some levels, right, that I want to keep an eye on. So obviously, this right here is a key level, right, over at 420.05, right? 420 is very serious level. It looks like we ripped past it and then kind of rejected it. So I'm going to put a little level right there, and it is pretty important to make sure you get these levels on point. So the high of this candle, you can see if you leave your cursor on the candle up here in the left, right, the upper left corner, right below the ticker symbol, our ticker name, you're going to get the date of the candle, the open, the high, the low, the close, the range, and the VWAP and whatever, 9-day EMA you got up there, right? So I use this to get specific open, low, closes, highs, and lows, right? So, the high of this candle is 419.96, which is 4 cents away from 420. So now I'll edit properties and I will make this 419.96, right? And now the name for this is bullish above, right? And the reason I'm putting bullish above is if and when price action can hold above this critical level, I will be supremely bullish, right? So I want to see a break and retest off this level. I want to see buyers defend this level, and then I'll be bullish, right? But on the flip side of that coin, that doesn't mean I'm assuming buyers are going to just crush it, right? If and when I get different if and when the candlestick analysis tells me something different, kind of like what happened here, right? We got a clean rejection at this level, right? I am going to be looking for sellers to defend this again, right? Because look, we were above it, we broke below it. It was a critical level on Friday. What I mean by critical is, look, buyers defended it once, twice, 3 times. Sellers snapped through it. Once we snap through this area, we got a clean break and retest on it, right? So notice what I'm doing here. I'm identifying critical levels on a larger time frame and then seeing how they play out on the intraday time frame, right? On a lower time frame analysis, right? So now I'm looking on the 1 minute and I'm identifying break and retest at these critical levels. Look, buyers defended it once, twice. Every time volume stepped up huge. Look, tons of volume, massive volume, right? So this is definitely 420 is definitely an area of value going into this week, right? So this is where I get my critical levels. And now, whether or not we hold above this will give us a lot of information going forward to make highly probable trades, right? I hope that makes sense. Okay, so obviously we got some demand zones here from previous days. I mean, does it hurt to keep them? Absolutely not. But remember, guys, everybody's different and everybody's mind works differently, right? My mental capital, your mental capital is different, right? So it's very important, right? If you're getting confused and you're going, and you're looking at these demand zones and it's making you biasly bullish, right? You got to get rid of them. And there's nothing wrong with that, right? One thing I'll do as a trader is I'll get rid of these all the time and then go back and go, hey, do I still need those, right? So now that they're gone, right, I'll go on the 1 hour and I'll just kind of do some analysis and go, okay, right here, this is a strong area of value that we held above, right? What is that for? That for 1785 level, right? And you guys understand where I got that? That was a previous swing high that we broke. Now we're retesting it. If buyers defend this, we'll be targeting 420. If they do not defend it, we can easily get a break down below and retest this level, right? So obviously, guys, don't beat yourself up if you're not able to do this. I've been doing this for around 5 years. I'm pretty much obsessed with the charts, and you better become obsessed as well, because if you want to win in this game, you seriously need to become obsessed, and that's just no sugarcoat. So those will be the levels I'm looking to play on SPY. You got this strong 409 demand zone. So obviously, if sellers come in, because that does make sense. I mean, we've had massive rally to the upside. We are in a very large ascending triangle. Obviously, if we break above this 420 area, we're going to definitely see 431, or there's a high probability of it. If sellers continue to defend this 419.96, I'm seeing a move to the downside and looking to play puts below maybe targeting 404. So understand what I'm doing here. It's if and then statements, right? I don't know how many of you program computers or write Python, but if this happens, then this, right? If we hold above this level, then I'm doing this, right? So it's that whole methodology of reacting to market information instead of predicting is so valuable, right? We do not predict the market. I don't even try. A lot of people know that I trade, family members, friends, they're like, oh, what's going to happen this year? I say, I have no clue. And I don't care what happens. My goal as a trader is not to learn to predict the market. My goal as a trader is to react properly to price action, right? It's to react properly to market conditions, right? This leads to profitability, right? Your ability to not predict, but your ability to react, right? Guys, if then statements, right? Write it down, post it on your computer. It's so important to remember if then. If this price breaks, then I do this. If this price breaks, then I do this, right? That's it. And if you could trade like that, it's going to help you tremendously. Give up that predicting, right? And that's another thing with the indicators, right? Um, an indicator is going to help you, make you think you can predict what's going to happen just because price may be overbought or this moving average is crossing this one, right? Listen, those are lagging indicators, as my friend Todd says, right? Those indicators are just telling you what has previously happened. They don't tell you, oh, when this is overbought, it's going to go down to oversold, right? There's no mathematic equation that can predict human behavior, and the market's nothing but human behavior. So go check out that lesson I just made on understanding the market auction, right? It's so important because the quicker you can understand that this is a game between big banks, institutions, and countries and large money, right? And understand that it's just massive traders with massive capital moving the market, right? Once you can understand that, then you can learn to identify them, spot them, right? And you can understand, hey, when critical levels get broken, what that's telling you is that buyers are in control. And now you want to look for a retest there, right? And if that happens, you then take the market long, right? Or if price comes into a supply zone, that's telling you that sellers are in control and it's starting to reverse, right? So now we're going to target demand because all that space in between is a market imbalance, right? It's really, I know it sounds kind of complicated, but the more you understand this as a market auction, right? And it's just massive traders going against each other, right? Until you can understand that, you're going to lack, you're going to be behind, and you're going to be relying on indicators. Trust me, if indicators work, don't you think everyone would be rich? You know what I mean? Like, really think about it. If the RSI could really work, don't you think that you would be worth a lot more money? It's wake up time, guys. Listen, stop relying on indicators and learn to rely on your analysis and your ability to follow your process, right? So let's check out QQQ. So QQQ has been extremely strong. It's had tons of strength. Look at this. We're on the daily time frame, right? And we broke all-time highs, right? So first level that I am going to identify is the previous all-time high, which is 33452. Now, I'm going to label this bullish above, because as long as we are above this level, I'm pretty bullish. So we're gonna put bullish above, and this is at 33452. Okay. So I'm gonna just get rid of some of these because they're wicked far back. And once again, I like to keep my charts as clean and as simplistic as possible. So we have another area right here. Let's hold on. So let's jump right into the weekly. So the weekly time frame, each candlestick's a week, and let's just check it out. So once again, I'm going to identify we have a very strong uptrend off this bottom. And remember, guys, a lot of this is just general, the first thing you see, right? It's really important to not get, too hung up on, accuracy here. You just want to identify levels, right, where smart money has made previous moves. So obviously we're going to pick a supply zone up here at the all-time high. This right here is going to be, and remember, once I've drawn my areas, now it's just duplicate, right? So I'm going to duplicate this level, right? And then you just click it, drag it over. So now this is a new bullish target. Well, actually, hold on. That's a little too high. We're going to go off these weekly wicks, right? So we got 347.54 over here. Out of properties, I'm going to make this bullish target. And now the reason I'm not really doing bearish targets is because right now we're holding above a bullish level, right? So remember that whole reacting and if then statements, right? So if we're holding above 33452, then I'm going to look for calls, right? If we fall below it, then I'll be looking for a retest down here to 310. And okay, so now we're going to right click, we're going to duplicate drawing, we're going to add a supply zone over here, right? That's at 372. Man, if we can get back up there, which we will. I truly believe it. I have faith in this country. Okay, so that's it on the weekly time frame, and obviously I'm going to duplicate this demand zone, right? We're going to bring this down to the 260 levels, right? Because that had strong demand. So now let's break out the daily time frame. Let me just make this 1 day, and we'll go with 2 years. Kind of give us some more data. Okay, so this is what it's looking like. And it's honestly, if you ask me, this looks very bullish. I mean, we've broken above 33452. That was a hefty supply zone. I mean, we had it, and now let's bring that back. So 33452. Why do I call that a hefty supply zone? I call it a hefty supply zone because last time we were here, we sold off all the way 23. The QQQ sold off by 20. Hold on. Yes, by 23%. Last time we were here, right? For a total of $78. So that's a massive sell-off. So that means the supply of shares were super higher than the demand of shares, which means large money was unleashing them, right? Super big sell-off there down to 254 demand. So we just broke through that, which means there's more buyers than sellers right there, right? Which is a pretty bullish indicator. Now remember, all those short positions have to start to liquidate their positions. And when a short seller has to liquidate, they have to buy shares. So they're going to be getting stomped out of their positions, providing massive liquidity to the upside, right? So, and that's what we call the market imbalance. And that's here what was slowly happening. So all these short sellers that were here, then buyers showed up here, and then you could see they started to liquidate out of their positions, causing a rally to the upside, because while they liquidate their positions and the original buyers are now, coming back into the market, that just adds to the buying pressure. So as long as we're holding above 33452 on the QQQ, QQQ, I am now targeting 34754. So, guys, once again, keep this simple. We've broken through this downtrend, right? So we have multiple factors telling us that we've broken out of this yearly downtrend. This is now kind of bullish. And if you want to, you can duplicate the channel and make yourself, a channel up and go from there. So, obviously this is pretty generic, but, this is how I set my charts up. Once again, not super crazy. Okay, so Apple. This is very important that we go through this real quick before we end here. Apple, because obviously all these commodities make up the QQQ and SPY. So you can see we have a massive level over here at 176.15, right, that we just rejected on Friday. So what does this mean? Remember, we've entered a critical area. Sellers showed up. Now, until, right, because I'm not exactly bearish yet. I want to see a critical level get broken, right, which would be 170.95, right? That's when I will be looking for like puts to the down, like swing puts. But let's jump into that intraday. So look, we got massive selling there. This right here is definitely a demand zone. I want to see be respected. If it can't be, I'm looking for puts below 175. Right? So that pretty much wraps it up, ladies and gentlemen. I didn't want to make this too long, but I really wanted to make a nice video for you guys to understand how it is I identify critical levels. And guys, remember, if then statements. If this happens, then this. Right? So that pretty much wraps it up for this lesson. I hope you guys enjoyed it. Make sure you hit a like and subscribe for more content. And guys, have a great week. I will see you in the Discord.